In this video, I'm going to teach you guys how to beat trailing drawdown. I will teach you several techniques that will be absolutely game changing in your prop firm journey. Because we all know how frustrating it is to trade with a trailing drawdown. It can really mess with some people. I have developed a very solid strategy to overcoming trailing drawdown and turn the tables on the prop firms. For example, I'm in a live trade right now with a company that has a trailing drawdown. We just need to do a little recap of trailing drawdown and what it is. Imagine that this is a 50K account. So your balance starts at 50,000 and then your trailing drawdown is going to be 47,500. You can lose $2,500 before the account is blown, right? But if you're in a trade that goes your way, your balance went up 1,000. So that means that this now is going to go up $1,000 with you, and you haven't done anything yet. You haven't taken profits, nothing. You're just still in the trade. But your drawdown has moved up. It's very important to understand. Let's say the trade goes against you and you don't take profits and it comes back to your starting balance and then you exit. What happens then? Does the trailing drawdown move? No, it does not. It stays right there. You originally had 2,500 that you could lose. Now you only have 1,500 left. If you don't take profits at the top and you give it back, any amount that you give back anytime your balance is at an all-time new high is going to cause your space between your max loss to increase. Let's say on the next trade, you take the trade, it goes up $100. The trailing drawdown is not going to ratchet up again until you get back to that $51,000 mark because that was your previous balance all-time high. The trailing drawdown only affects you until you get back above 51,000. I'm in a trade right now that is deep in profits, right? How do I handle this? What do I do? I am implementing a simple strategy. Once the trade went my way and it's been cruising here for a while, I start looking at the previous candle's low. So as price is moving up here, I'm looking at that low. I'm looking at every single low of the candle and seeing if the next one goes below it. And I'll stay in the trade until that no longer takes place. No, 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 no. You get a few wicks there, but you really want to see it close below. If the candle closes below this candle's low, I will exit the trade full. As you see, it's allowed me to stay in this trade. My original target was the previous all-time high, which is right here. This was my original target, but it's allowed me to gain an extra 30 points profit, which is $600 profit. Huge difference in my original trade. There you go. Now one time framing has ended. I'll go ahead and exit that. Cool. People were like, oh no, trailing drawdown, help. Ah, I can't do it. Ah. You really can if you just slow down for a second and think about it logically. Why would the prop firms implement this? They implement it because they know that we've been told since the beginning of trading time to let your winners run. Everyone says it. Let winners run, right? They also know that if you get really large RR trades, your chances of failure are very low. They implement these for two different reasons: in hopes you fail, and two, to mess with your head. If you just chill out a little bit, it's not that big a deal. And it really only affects you when your balance is at all-time new high. That is the first way to stop the fear, because I feel like that's what it is for a lot of you guys. It's just a fear of it. It's probably done some damage to your mental over the failed accounts. We have number one, the easy one time framing way. The second way is going to be scaling out and re-adding. I'm going to show you how you can scale out, guarantee a winning trade no matter what happens, even if you get stopped out, stop the trailing drawdown from acting as a loss. And I'm going to show you how to add back into trades that is going to allow you to continue to get that gain that you guys are seeking. The thing is, though, if you don't understand how I look at price, you're not going to be able to do this. You won't be able to replicate it. It's very important you watch this next section because the market phases are going to tell you how to do. Make sure you watch until the end of the video. I have something there for you guys too. And now I'm going to use my understanding of market phases, that the market goes in a expansion phase, followed by a stopping phase, consolidation, which is then going to be followed by a reversal and another phase of stopping price action before we see the next phase of expansion. This is the basic movement of all trends. All price movement is working off of this kind of framework. Scaling out and re-adding. So this is something I became very good at over time. The market is trending right now. This is a perfect time to implement this. I'm just going to go ahead and enter 2 contracts at random here. Doesn't really matter where, because the way that we're going to trade it is, it just doesn't really matter. Let's imagine that my account balance is at all-time new high. To deter the trailing drawdown, to not let it affect me, I'm going to grab this cool little tool TradingView has here, which is called long position. I'm going to put it up here. Let's say I'm willing to risk to the top of that black candle there, which would be about 6 points. In a 50K account, you really don't want to be risking over $250 per trade. Now, once price reaches 1.5, that is my R for the trade. That's my risk versus reward ratio. Scale out at 9 points. What do I mean by scale out? I'm going to exit a portion of my trade before my target. And this is going to help in any different ways. We're going to use it right now to help with trailing drawdown. Once price reaches 1.15, I'm going to go ahead and take off 1 contract. All right, exited 1 contract. I'm also going to sell into strength and add back into retracements. If you're above 500 and you're not willing to exit earlier, you're just setting yourself up for trailing drawdown to get you. You got to think about what's the max loss you'd want to take on a trade. If it's 500, then that's really, you don't want to let price come back against you more than that, right? Because if your balance is all-time new high, it's going to count as a loss towards you. All right, now price is at my $500 mark, just about. There it goes. I'm going to take 1 off. I'm still in the trade. I'm still getting gains though, right? Now on retracements down, I'm going to add back. This is what I refer to as always in long. This is a strategy I learned from Al Brooks when I first started trading. I got lucky because he was the first trader I ever really followed and got into his content. Huge blessing. It put me far ahead of everyone else. Most people, the first people that they watch are some guru dude that doesn't really teach them anything, or they go into someone that's not focused on risk management, trade management, and more on like untested strategies that they don't even understand. You want to make sure that you have enough profits when you add on. It doesn't put your now break even price too close to price. You want to still allow for a little bit of drawdown. Let's go down a little, one more time frame, because we can use the market phases to help us with this. I'm going to go ahead and add on there. Now I'm long 2 contracts. So I got to move my stop up. Now my new break even price is where? It's right here, right? Where's my now stop going to be? Right here. Very low risk. This next part is very important because I'm going to be proving to you guys why you should be scaling out. It's going to show the power and the straight up fact that it is the make or break for a lot of you guys. Stay tuned and check it out. It is really powerful stuff here. Let's say you had a trade on and it's 5 points with 2 contracts for a total points of 10 points with a total risk of $200. Now, let's say you took profit at 1.2 times your risk, which that would be $120. Now, how much risk is left on the trade? You still have that remaining contract with 5 points of risk, right? So you've taken profit. You've got 120 in your account. That's profit that can't be touched or can't be taken away from you because you've already scaled out. You have a remaining risk of 5 points. Now, if you were to get stopped out, what would happen? You'd have a remaining profit of $20. You guys see, guarantee, you just guaranteed you a winning trade. All right, and then I want to scale out anytime my total gain in a 50K count is over 500. Scale out. I'm locking it in and keeping this from becoming too high. But as soon as it gets a pullback that is decent, I'm going to add back that contract that I just took off. To do this, you need to think about how far away from price is from your entry. Right now, price is going to here. I know that because I got it like that. On a pullback here, you can do this a couple different ways. You can use previous lows in a bearish environment, or you can use trend lines, which I suggest you use both. The trend line would work there, but you would not have been able to catch that without the trend line. We have a previous low right here. There it is, hit. Let's go and add into this. While we're still using one time framing, it's still one time framing down. We remove our stop back down to our 6 points. It's still one time framing, still respecting the trend line. We're going to scale out here as soon as it gets over 500 again. Still one time framing here. Looking like it might try to break it right here though. I suggest you look at one time framing on a 30-second chart. That's my favorite time frame to use it on. All right, we have the main trend line up here. We're still one time framing, but because this trend line is so close to it, I'm gonna let it ride here. My stop will now go above this high. Now, once I scale out here, 1.5R, which is right there, I'm gonna go ahead and take off 3 out of 5. Now I've locked in the gain. I entered 5 contracts total. Therefore, it averaged out the last 3 contracts that I entered to right there. One time framing has ended here. If it pushes up at all, I'm gonna have to go ahead and exit. There it goes down again. Now, I want to exit when I get over $500 or 1.5R, whichever is first. I'm having to risk about 10 points on this trade. Now, if it comes to that previous low, I want to add into this. I'm gonna take profit down here. So if I add on here, that's a gain. All right, so just touched that previous low right there. Went ahead and entered one more contract. Perfect trend line touch there. People that say trend lines don't work are just blind to price. I've been proving it for a couple months now that they have one of the best win rates that I've ever seen, 80 to 85% win rate. All right, now we can move our stop down to that high that it just made. It shouldn't go back above that. I'm gonna go ahead and add on that other 2 here. Now I'm full 6 contracts again. And there's a 1.5R right there. Now we're gonna exit half of the position right there. All right, one time framing just ended. So I went ahead and exited. I didn't wait for a close though. So it's probably gonna keep going down here. I'm gonna go ahead and re-enter. If you scale out this way, you can chase price. You can do a lot of things that other people cannot do because they won't scale out. So they can't mitigate their risk immediately. I chased price, but I also just scaled out one immediately. Now I have this extra buffer that I created by scaling out. There's the profit target I gave quite a while ago now, but we're not going to stop there, are we? No. It's one time framing. Could go down here. A lot of extra profits given because I'm willing to use one time framing. And you ever see me, I never set limit orders for take profit. That's just guaranteeing I don't get an extra edge. There is some luck that goes into it. And if you let luck play on your side, it can really pay off. All right, so I'm out. There's the end of one time framing. Now, this may be a good reentry here. It's came back to the previous low. Let's go ahead and enter 3 contracts there short. Now, this is the other major thing, saving your stop. If you feel like you are at a point of hoping that it works out in your favor, you had an original thesis that price would do something like in this example, I expect this candle to go a little bit higher and I expect the next candle to immediately drop. Now, if it deviates from that in any way, and I'm hoping it works out, I know that feeling. I know you guys know that feeling where you're just sitting there, damn, it didn't work, but I'll just see if it works out anyways. I don't allow that to happen. I save my stop. All right, so there's 1.5R just about. Yep, there it is. So I'm gonna take one off. Nice trend line touch. I'm gonna add back on that one I took off. Now, if it pushes up any more here, I'm not going to allow it to hit my stop. Why would I do that? That makes no sense. I plan on seeing it go down. I'm not expecting it to go up at all in here. I always have this area thought out in my mind. I often draw it out on my chart actually. All right, so I'm out there. I saved my stop. How much? I just saved $200 there. Now imagine over a set of $50 over 300 trades. Now let's say over the 300 trades, my average reward for my risk was I would make $500, right? And then when I lose 250, right? Let's go 500 and I win half my trades. This is going to be a really mind blower for you guys. Out of 300 trades, I would lose $37,000, but I'd make $75,000. And that's at a 2R. Now, let's say on average, out of those 150 losses, I save myself $120 equals 19,500. Now, when we do a total profit score, you're going to see the difference here. It's going to be a difference between some of you being profitable and not, because we want to slowly skew the odds in our favor. With the save your stop, we made $55,000. We would have only made $38,000, right? Huge difference. If we look at this in terms of R&R, if we take the 37,500 and think about that and divide it by 150, this originally was a 2-to-1. We increase it to a 4-to-1 RR by doing this. It's something I've never done before, is actually like break down the math and how much it actually helps. You double your R&R by saving your stop over an average of 300 trades. Obviously, it's going to differ from like trade to trade, but I think on average, you would save on a $250 full stop, you would save on average about $100 to $120 per trade, which that's a lot. That is the other way, that by just scaling out and saving your stop, you can really skew the odds in your favor. But the scaling out is really a huge part of trading with the trailing drawdown and mastering it. You have to do it. You can't, I don't think you can be profitable without it. Huge trade here. Am I not going to scale out? No, of course I'm going to scale out. Even though I'm pretty sure where I know where price is going, I'm still going to scale out though, guys. I think it's going here. Now, we're going to use one time framing to dictate our exit. If you used a limit order, you would not have caught any of this. None of this would have been caught. But you see why limit orders should be called limiting profit orders, because that's what they are doing. They're limiting your profits. And just like this also increases my risk to reward ratio, right? Instead of my average trade of being 500, I just made 1,500. Imagine what that does over a set of 300 trades too. Incredible change. I preach these things and I tell people to do them, but I've never really broken down actually how much it can benefit you. Now, your average reward per your risk is 6 or 7, but you only have to win 1 out of 6 trades. It gets pretty decent there. Alrighty, guys, if you want to get funded, if you guys want to trade with me and learn from me live after watching this video, I have a Discord that is absolutely killing it. I stream every single day, guys, except for Saturday. Sunday through Friday, we're live streaming and killing it. The goal is 20 points per trade or per stream. I don't remember the last time we had a stream that didn't get that 20-point profit. You can trade with me, make 20 points, and then it will take you about 2 weeks to pass an eval if you just traded with me during the streams. And then another 2 to 3 weeks after that, you would get your first payout while also learning from me live. Definitely worth checking out. I will put the link to the Discord in the description. When I first got into trading, there wasn't a whole lot of prop firms out there. There was Top Step and a couple real shady ones. I went through dealing with a lot of bad companies, denied payouts. I eventually found a group of funding companies that I believed in that have changed my life. I started a website where I guarantee these companies pay you out. I'll explain a little bit more later. If you come to my website, verifiedfundingcompanies.com, I have reviews here. I have a discount page that has the best discounts in the game. There's no one else that has better discounts for me with these prop firms. These companies I truly believe in, guys. And if you follow their rules and for some reason they like go off the hinges and decide not to pay you out, I will step in and pay you out. Apex Trader Funding just recently did this, and I stepped in and paid traders out with my own money because that's my guarantee. So you can use my guarantees like an insurance. Just make sure you use my codes. Since you guys watched until the end, I'm going to hook you guys up with a giveaway. To enter into the giveaway, which is one free 50K Bullnox evaluation, you need to answer this question in the comments and then one other thing. Will you implement the teachings In this video, are you just going to watch it and then not implement it and end up wasting your time? Because what happens to a lot of people is they watch a lot of educational content, but they're not ever actually trying the things that they're being taught. I challenge you here today to implement it and then get back to me and let me know, because I guarantee that it will change your trading. And then sign up for my newsletter. We're going to go back to my website here, and on the discount page, just put your email in here. It only takes a second. Boom, you put it in there, push subscribe. That's it. There's nothing else. All right, guys, I appreciate you. I really believe that this will help you. And if you implement it, as you saw the numbers there, it's going to skew the odds in your favor so much that eventually, if you keep implementing these little things that I have, they're going to stack up on each other and it's going to be almost impossible for you to lose. I hope to see you in stream on the Discord. We will not fail. We will succeed.